Hi everyone. So I didn't really think we were gonna have to talk about this quarter because I thought with everything else going on in the market, they wouldn't try to put on a volatility dispersion trade. But I guess this only comes around once a quarter, so you got to make money when you can. And so I think what we're in the process of seeing right now is sort of a last minute effort, I guess, to put on a volatility dispersion trade. The reason why I'm saying that is because we're seeing some of those characteristics that we've seen in prior quarters, right? Where you're seeing implied correlations coming down, you're seeing, the VIX coming down, now under 25. You're seeing things like Amazon trading up, you're seeing you're seeing Apple trading up, you're seeing, Meta trading up, you're seeing Microsoft trading up. I mean, granted, they're not up a lot, all of them today, but the last couple of days they've been trading up. Alphabet's really not doing anything, but they already reported. And so, when you get implied correlations moving down and you get VIX moving down, and you have what's happening here, this is showing us implied volatility levels at the 100% moneyness level 1 month out. And what we see here is that implied volatility levels are historically very high. We know that going into earnings, implied volatility levels rise rapidly, and then after earnings, they crash, as you can see from these examples. And so I decided to take a look at how the positioning was going into earnings next week and to kind of get a sense of, what the options market is telling us about what's likely to happen. Now, remember, the way an implied volatility dispersion trade works, now I've never done one myself, but I've studied the process and the mechanics of it quite a bit, and it seems to be pretty logical. The way it works is that you sell the volatility on the index, which would be selling the S&P 500 volatility and volatility levels. You buy volatility on the stock, and you do that by buying the calls, and then you hedge that by owning the then you hedge that by owning the underlying. And the idea being is that once earnings pass and implied volatility crashes, you unwind those positions, and you get out of the trade. So that typically what happens is that, again, we've seen this happen before, is that post earnings you typically see pretty big movements in stocks. And so when we look at, let's say, Meta, for example, and you look at the gamma exposure levels, what you see here, which is quite interesting for next week, is actually fairly bullish positioning, which is not what I would have expected, because I think the last time I looked, it was fairly bearish. And that's one of the reasons why Tesla's been rallying the last couple of days. And so what you see here is a very big level of gamma at 550. Kind of gives us a sense of the area that, Meta has to get above for it to really rise. And then you can see there's a lot of gamma built up again here at 600. So what it kind of is telling us is that Meta's got to get over 550. Once it gets over 550, if the news is good, it perhaps has room to rally to about 600. The one problem is that deltas are very high at 550. And so what happens is, right now at 550 and all these green bars, what's happening here is that once implied volatility goes down, market makers are hedged right now against these long call positions in Meta, which are creating the positive deltas. What that means is that market makers are short deltas, and and so they hedge themselves by buying deltas. Now, and to buy the deltas, they can, let's say, buy the call, buy the stock, however it is, they have to hedge themselves through being opposite of what their what position they are. So basically, they're in the same direction as the owner of the call. And so what happens is once implied volatility drops, the amount of delta that's available will drop, because when you figure out option pricing, part of the option pricing model is IV. And so if we go here and we look at the option chain, So if you go to the 550 call, what you see here is that they're trading for $23. So if you take the stock trading at 542, and then you take the $542 call, and then you add $23.48, what it tells you is that by the end of next week, you need the value of Meta to be above 566 to start earning a profit. Now the stock is at 545 right now, 0.32. So you need it to go up $20, or you need it to go up almost 4% to start earning a profit on that. Now, the thing is that this IV will continue to go up going into the event, making these calls and puts more and more expensive. So what happens is as the stock price, as the implied volatility goes up, these delta positionings will also begin to increase. Now, what will happen is, as you can see from this chart, once the company reports results, this was April of last year, implied volatility went from like 58 on Meta all the way down, into the 30s, right? So implied volatility will basically get, cut in half, and that will make the options worth significantly less, and that means that the delta positioning will decline by a like amount. And so what that basically means is that once the company reports results, the market maker will be overhedged and will need to start selling Meta following those results. And so when we do that same thing for Apple, let's say, now Apple, I own Apple for full disclosure. I don't trade it, but I do own it. When we look at gamma positioning in Apple, you can also see there's a very large positive gamma positioning in Apple with strong resistance, probably around 215. And also when you look at Apple, there's lots of positive gamma, a delta at 215. And again, what this implies is that once the company reports, what it implies is that market makers are now long lots of Apple. And once the company reports results, market makers are going to be sellers of Apple. You're going to get negative hedging flows. When you look at Microsoft, that's also suddenly become very positively positioned going into results, which is really surprising because I would have thought that you wouldn't have seen that. In fact, with Tesla, it was very negative. And so again, once these options, once the company reports results, IV is going to crash. Market makers are going to have lots of stock to sell. And of course, when you look at finally, when you look at Amazon, that's also the same. That's also the same case that you're seeing here. So what this is all applying to me is that once we get past once we get past these results, if they're not spectacular, meaning they don't beat and raise, it's likely that you're going to see these stocks all trade lower. Now, when you look at Google, for example, Alphabet, that stock is trading a little bit higher today, but not nearly as high as it was, probably because there's some selling going on in this as well. But I think more importantly, what this is kind of telling me, the only conclusion here that I have is right now I think there's a volatility dispersion trade taking place, and that will come off next week once we start getting results. And in fact, if we look at the calendar, for next week, we'll see that Apple, I have this sorted by market cap. Apple will report on May 1st, Microsoft goes on the 30th, Amazon goes on the 1st, and Meta goes on the 30th, and Lilly, which is a distant 5th, goes on the 1st. So they're all going on that 30th and on the 1st, which is essentially Wednesday and Thursday of next week. So what this tells us is that we could see some more grinding in things like the VIX lower. It could mean that you're going to see some continued grinding or around this 5,500 level in the S&P. We are, according to this, at least when you look here, looks like we're basically almost back into positive gamma for the market overall, which means that volatility is going to really start subsiding. My guess would be is that we're probably going to continue to hang in this zone between 5450 and 5500, just because I think at some point there's got to be a floor of the VIX, just because of the environment we're in. But the fact that you're seeing the 1 month implied correlation index dropping the way that it is, the fact that you're seeing the VIX sort of dropping the way that it is, the way that you see the positioning in the options market heading into the results for these SAV4, and then of course with the positioning of where implied volatility is for these stocks, what it implies to me is that there's actually some sort of volatility dispersion trade happening at the moment. And again, that will probably start coming off next week. And so we could be setting up for one of those scenarios where you're going to see the companies report, and unless they're spectacular and surprising to the upside, they're gonna basically trade lower on anything that's in line or roughly in line, and if it's bad, it's gonna probably trade down significantly. So that's my sort of takeaway, a week out from these things, and I think that's what's sort of one of the drivers behind yesterday's price action, which was really just this grinding rally all day long. And I think it's part of why you're seeing even the market rebounding and kind of carrying forward this afternoon. Again, I don't know if we're going to try to make an attempt to get up to this gap at the Liberation Day event, but it's certainly possible once you get into this zone that you go all the way back up. I don't think that's likely, just because I think there's a lot of other things going on in the marketplace, especially when it comes to what's happening in currencies. We have a lot of things going on next week. Also, there's a lot of reasons to think that implied volatility doesn't really go much lower, because you're going to have a lot of economic data next week. You're going to have a lot of you're going to have the BOJ meeting. Of course, you're going to have Trump every day. And then, of course, you're going to have those earnings on top of it. And it's the only thing at this point that makes any sense to me, just because we've seen this over and over and over again, through the quarters and the years. I just didn't think it was going to have much of an impact this time around, but clearly it is. So anyway, have a great rest of your day, something to kind of think about, and we'll see you later. Bye.